Can you explain why the big concentrated position is something that the CFT looks for and is on the watch for to be careful about, and how that impacts the market or has the potential to impact the market?
Well, I mean, if you and I are trading in the futures markets, for a personal account, nobody's going to notice. But if you've got a sizable position and you trade that sizable position, it's one thing if you just have it, but if you're trading it, that all of a sudden 20% of the market goes long or goes short, that can move markets.
Right.
And so that's why there are not what I want with regard to position limits. So that's a whole nother topic of further position limits. But there are some position limits in what is called the spot month. That's the delivery month. That month where you hope everybody doesn't get a pool full of oil. So there are limits in the spot month. There's not limits in what we call the back month. That's every month other than the spot months, or all months combined, which would be the spot month and the back months. Those limits I pushed for, but have not been put in place, even though they're required by law. But those limits can traders that have large positions that are approaching those limits or above those limits or limits, or had an exemption from those limits. They are particularly traders that could roil markets with large trades. So it doesn't mean that they're a problem just because they have the positions, but they're certainly suspect. And regulators look at those sorts of things because they can push or pull markets around inappropriately, and that can damage a lot of average folks and a lot of other traders.